Hey guys, good evening. This is Simon with Trade and Perform Coaching. Uh, just want to go over how we looked at the day today and how the day actually played out. So first of all, when we came into the day, we knew that we gapped up and we had identified our key location was that if we could not get below this 2343 to 2340, buyers were in overall control, right? And just like in the videos I've posted over the last couple of days, we had some basic things to look at. First of all, if you'll look, this is today's chart, and you'll see that we, first of all, in the first 5 minutes of the day, we gapped up above all-time highs. We failed to backside test the all-time high, or even make an attempt for a half gap or gap fill, right? All of that tells us immediately that buyers are in control. So you have one or two choices there as a trader. You can just assume that we're going to continue going up at endlessly, in which case your best decision would have been to take the close of that first 5 minute bar, put your stop right below, and watch the push higher, right? So that's not my trade. I generally skip on the first 30 minutes to 45 minutes so as to avoid getting stopped early in the day and letting my and instead waiting for my trades to set up. So again, these zones are published to members of the room. The prior day, I think I posted these up Sunday evening, if I recall. It might have been Monday evening, but I think it was Sunday evening that I posted these up. So this is my first location, and I had anticipated that location based on mathematical computations for where we've been reaching exhaustion in the past. And this was the first area I wanted to consider a short. And if you look when we pushed into that short, you can see that as we were continuing to push higher, tick continued to push lower. That doesn't necessarily mean a lot in this particular market because tick has not been as responsive to the S&P 500. The index itself has been very strong and on many days has completely ignored sell pressure in the broader market. So this by itself was not an indication. However, I did point out in the room, if you are uber aggressive, that you could either buy the weekly puts to the downside to get some downside exposure from that location, or take the short. I actually chose to pass on this short simply because I'm a little bit allergic to shorting all-time highs. But one of the things we have been discussing in the room is the ability to use options in place of actually shorting the futures when it makes sense. And I want to show one of those areas where that made sense. So the idea behind the zones is that they are able to give you 2 points of counter rotation. And I want to cover that really quickly because if you just use the zones alone, first time into the 2364 to 2365, you clearly were able to get 2 points. And the first time into 2359 and 2356, there's a little note I had there, let's remove that. That was also good for 2 points to the upside. But we were left with a little bit of a conundrum. One of the things I look for is a break of the last push up before I'm looking for short location. And the market rolled down very nicely, and it actually rolled down, even though I don't have the chart up right now, on the heaviest sell pressure for a single rotation that I had seen going all the way back to, I believe, the 6th of February. That was pretty encouraging. It also left us with a break below the last push to the upside. So where we were looking for shorts was either at the 50 or the 62 retrace, really right at the 50 retrace here on the push back up. And you had two choices to take. I want to be clear, because what I'm trying to teach is that there's two ways of looking at risk. If you were just looking at risk for the sake of, I want to get my 2 points, if you simply took a short at the 50 retrace, it obviously rejected out of there, rolled down for 2.5 points, and you're able to take your money and move on to the next day. However, there is an interesting concept that if you're trying to look for a larger move to the downside, how do you play that, right? And the reason why I say that is the appropriate stop for this 50-60 retrace here is actually 1 point above the high of the day. The problem with that is if you shorted 2360, it means you had to take 6 points worth of heat, and because of the nature of the market, getting 6 points on the downside has been just a huge challenge, to say the least, right? So remember, if you just want to take your 2 points, you did fine here. But if you wanted to get a larger rotation, you had to figure out how to put that risk on and somehow come up with a 1-to-1 risk-reward ratio. And so one of the ways that I do that is by using the weekly options. And it makes a great point, even though I didn't come out ahead on that trade today. I could have covered it for 2 points, but I really thought my goal, and this is what I'm trying to get at, my goal was to try to attempt, I figured it looked like a failed range extension at this point, and I thought we get a retest of either the low or the gap fill. So I was playing for about a 5 to 10 point move to the downside, but I wanted to limit my exposure. So I took the 23, at this location, I took the 23.55 puts, the puts on futures, right? And I paid $2.75 for those puts, approximately, actually not even approximately, right here. So then I was left with two choices, right? I could have covered when I got my 2 to 3 points right in here, but the goal was to push down here. But here's where those came in very valuable. Obviously, I was wrong about the short, even though I was not wrong about that technical pattern. That pattern is very profitable for me. Had I been in the futures, there's no way going into the close up here at 23.65, I would have held the futures overnight. Just not in my nature. And it's very, very likely that I would have taken a stop or a loss. And the reality is, if I had taken the futures instead of the options, I just would have covered it for 2 points. It was taking a long time here. But what the options allowed me the luxury of doing is waiting, right? Possibly into Asia, possibly into tomorrow. Now, those options may expire worthless, right? But what I've done is I've limited my risk, and I've eliminated the need to monitor uber closely whether I want to stop this trade out, right? What I've done is I've given myself a really open downside call. Remember, this isn't about me being right or wrong. This is about me looking at a pattern going, hey, I think we have a chance to come in and close the gap over here at 23.47, or at least retest the low, either of which would put me in a very nicely profitable position, right? And there's no way I could do that after sitting here for an hour and let the market play out, let the pattern play out. And a lot of times, the pattern playing out will take longer than what my tolerance is when I have unlimited risk, meaning either I have to put a stop in on the trade, right, or I can't afford to let the trade play out. But I want to finish this thought so that it's clear, right? This move here would have stopped me out in my futures trades, assuming I hadn't taken my 2 points worth of profit, because I got very good entry here at the 50 retrace, right? But what this has allowed me to do, is to stay with my risk, give me a chance maybe in the Asian session or early tomorrow to get a push down and cover that trade. But even if I didn't want to continue pushing that trade any further, I bought those at 275, right? And I could close those out at the end of the day for somewhere between $1.90 and $2 as we roll down in this push lower, right? That's really, really important, right? Because this would have otherwise been a complete loss in my P&L, and now it's just a minor loss at the end of the day. And then I can make a choice. Do I want to stay with the trade and try to push it lower, or do I want to close out? And it's all about finding alternative ways to be able to complete your thought process and your pattern process to realizing larger profits, right? Beyond just simply the 2 points that the zones afford. So long story short, to sum things up, using options to mitigate some of the risk involved in trading, if executed properly, can certainly be a very successful strategy and gives you the luxury of not worrying about how tight your stops are behind your location, right? It lets the variables in a pattern play out. However, my daughter texted me and I lost my train of thought, pardon me. However, obviously if I could nail this trade without knowing whether it was going to stop at the 50-60 or come back and retest the high, I'd be a genius, right? I would have taken this for 2 points. I would have taken this each time. The fact of the matter is, it can do either one. It can come back to the 50-60, come back and double test, give a second test the high, and then roll down, or it can break. Either way, what the options are doing for me and what I'm trying to teach and educate and mentor my traders in is that this is a way, when you're looking at the larger picture, for a potential roll to the downside, even though, and if you want to take that shot, that this is a good way of taking that shot with measuring your risk and not leaving yourself vulnerable to getting run over to running to 2380 or 2390. It lets you play out the pattern, right? Without trying to figure out what the market's doing as a whole. And if it doesn't work, right, the pattern itself should have a particular edge to it. And what using the options does is eliminates the risk to the pattern, taking the pushing it to the limit of where you can no longer tolerate the stop, and allows you to stay in that trade, hopefully in this case for a push down towards 23.53, and the extended target would be 23.47. I don't have much hope beyond that, and or just saying, hey, I'm going to give it to the end of the day, and you end up taking a slight loss, whereas you would have taken a complete stop in the futures. Anyways, I hope that's helpful. The market is still, going back to the volume profile, we're still one timing to the upside. You will know that there's a potential for changing character the first time we are able to trade below the prior day's low. However, just going back to the trade on approximately, I think this is the 12th, 11th or 12th, right in here, the market doesn't, just because it does trade below prior day's low, that doesn't mean that it has to change character. It's just the first clue that things may be changing. Also, the ability to trade below the midpoint of the prior day is also another clue. So a gap down, open drive lower would also be very interesting. So in the meantime, buyers definitely have it. That was an interesting close. We'll see if they follow through in Asia and Europe and take back any profits. But unless you have the strongest of stomachs, you really want to be looking for your long side entries and what those might look like. Anyways, I hope everyone has a great night. We had a good day trading. I look to continue that tomorrow. Talk to you later, guys.